So that's it for us. Would love to hear questions and feedback. Let me pull up the chat. Jen, is there anything in here that anybody want to come off of mute and ask questions?
There's a question from Matthew Laus. Matthew, do you want to unmute and ask it? Or...
Yeah. Hey, thanks, Jen.
Hey.
Well, I mean, right off the bat, I see, you know, obviously San Diego, Seattle, what was it, Las Vegas? I forget the third one. The other communities that you have seen this program develop. In relation to Tucson, what did those communities also use the $200,000 model, or did you set that model based off the Tucson? I just a little explanation as to why 200,000.
Yeah, we're stealing as many good ideas from as many corners of the universe as we can. The Seattle, I think, set the standard for $200,000. It's I'll give it a little bit of context. So the answer is we're copying. It is not a very uniquely Arizona number. Kai mentioned that his groups invest about $100,000 in Anchorage and across Alaska. We see ourselves as more similar to San Diego and Seattle than Anchorage, I think, and so I think that's fair. But the way that I think the other communities, as I understand it, found this number is that it's a manageable enough number to fit a recruiting pipeline dynamic, right? You need $5,000 is a number that a first-time investor is comfortable with. It's a very small amount compared to the standard angel investment. It gives them, it's a learning amount of money, which opens the doors more widely. But you can only manage a certain scale of cohort. And so those two numbers multiply together. 5,000 is a good number. 40 is a manageable number. That leads to $200,000. What I will say is that, so that's what we market. And we have to start the marketing with a number. We have to say, one company will get X amount of dollars. And so we anchor on the 200. But what's interesting is,
can I just jump in real quick? And my thing would be, we have that you, and I, you know, obviously I know you put a lot of time into this, but my thing would be, I would tailor it with 3 tranches up to 200,000. And not to complicate your funnel, but $200,000. I mean, I've had many startups, and I'm not talking startups, we're talking significant businesses in Tucson come to me, and they've been in the seed, whatever process, and they've literally come to me and begged me for $10,000. Find them people who can put in at least 10,000, and they would take them immediately and add them to their seeding situation.
So let me comment on that, and then I'm going to pause on going too deep into an analysis like this, but I'm happy to put a group together and we can talk about it. We've gotten a lot of feedback in different directions around this. And our choices, we know that there's a proven model, so we're going to defer our own we've had our own thoughts about how to approach this. We're not going to overthink this. This is how it's worked successfully in peer communities. We're just gonna run that. But I do think that there's a lot of what's really interesting about this is that we do not operate the fund. So this is a technical detail that I think is helpful to say. But Capital Gravity or Next Foundation or Justin, we don't operate the fund. It is a fund with the investors, and they're the only legal decision makers. So the reality is they get to decide how they deploy the capital. And so our model is, we are promising the world 200,000. Please don't change that, right? Like, we just have to beg them, but we have no power to force them in any one direction. But what that also unlocks is you have the ability, what ends up happening is that different people in the 40 get excited about different companies, and it creates a momentum towards investing in more than one. And that legally we can facilitate creating side funds in the course of the program. So we actually leave the fund open until a couple weeks after the final event. We open it starting up in soon, and we won't close it until October, November. And that means more money can come in at the event and more funding can be made. And as we move forward and learn how to execute this well, I think we'll see a lot of innovative ideas that we get to play with and make modifications. So I appreciate the question.
Justin, before you move on, just really quickly, a couple key points. One, it's not just Tucson, it's Arizona, and there's a lot going on in other parts of Arizona.
Yep.
And two, in these other cities, what we've seen is it never ends up being 200, it ends up being more, because a lot of these investors get excited about one company and want to put in more than 5. So I think we're picking a number based on what was marketed in the past. But the truth is that, especially if you're looking for high growth startups that are ready for investment, that we kind of can't pick the winners, but you can exclude the losers, right? I mean, that's the goal, is to mitigate the losses. That there's an opportunity to get more money into a company that's ready, if you can get one that's ready through the door.
Terrific. Who would like to chime in next? You can just unmute yourself. Or Jen, do you want to call on someone?
There's definitely questions in the chat. So Steve Zylstra asked, are all the team members existing angel investors?
No. So what's interesting is that the organizing team is independent of the fund. I kind of touched on this a second ago. So so the angel investment requirement or obligation is on the fund participation side. The other is a program organizing team side. So so we're not, so the answer to that is we are not all angel investors.
All right, I know we have limited time, so I'm gonna move through these questions quickly. Next one is, how will you recruit the startups? I think we touched upon that a little bit, but did you have anything else to add?
Yeah, I think that part of hosting this meeting is to build an appreciation for the opportunity. I think the program does identify outreach partners or networks that we might want to plug into, and that means I think we make no assumptions about our ability to go beyond the insider networks that might be significant but are still kind of the established community. That in order to move outside of the investors we already know and the startup community channels that we already have, we needed to engage a much more diverse outreach pool. So we've identified partners across all the smaller communities and economic development leaders across the state. And so our intention is to be as diverse as we can and open as we can in engaging partners. And that will be a key part of how we not only recruit startups, but how we recruit investors in other roles, and how we, and in doing that, it'll play a meaningful role in how we effectively achieve diversity objectives.
Cool. Skipping over to Kristen's question about other than grassroots outreach. Kristen, I don't know if you want to unmute and ask it yourself. Right there.
Sure. Hi, everybody. It's good to see a lot of familiar faces. Justin, you sort of just hit upon it, but my question would kind of go a little bit further, which it's great that you're now engaging partners, but if your goal truly is to be inclusive of populations that haven't participated in the past, can you talk through some of the marketing strategies that you're employing other than grassroots outreach to partners to really reach investors that have no knowledge and or aren't engaged with the current ecosystem?
Yeah, and I would say that we promise no domain I don't have like the brilliant answer to a hard problem, right? I would say that we are approaching this with an appreciation for that it's an important problem and it's a priority problem, and that there are much better ideas in a room like this than our team can come up with. So so I'm going to start by saying we're not coming in teaching everyone how this is going to be done well. And in truth, I recognize that this is going to be a growth area, meaning that the first cohort, the highest priority is that the cohort run so that you have a reference for the second cohort as a valuable thing. Right now, it's this unknown to everybody. So so we've got plenty of time, and we're putting in the work to make the first cohort as diverse and beyond the traditional networks as we can. But we're also recognizing that hopefully the cohorts will improve in that year over year. When it comes to specific ideas, we are talking about people with wealth. And so, so it's also, there's two pieces of the puzzle. We're not necessarily reaching out to the hardest to reach disconnected people in lowest income. Like, that's not the audience we're trying to reach to. So they are findable in a way that I think if you're trying to do social impact work, that's going to be harder, right? To work with low income entrepreneurs in a different setting. But so then you can kind of identify, and I think a lot of it is referrals. It's going to be going out to the existing investor community and asking them to identify friends and colleagues, giving them criteria that help identify what we're looking for. We've agreed to do a partnership with the Arizona Technology Council, who one of the really, and these are conflicting priorities. So I mean, I'll acknowledge this up front, but I think it's really interesting, which is that in Silicon Valley, the glue, the fabric that pulls that together in a really unique and powerful way, we don't have here. And I don't think until we started working on this that I understood that it was missing. And it's that the investor community in Silicon Valley wants to be solicited. So when someone works at Google and qualifies to be a high net worth investor, they'll go change their LinkedIn profile to identify themselves as what's called a limited partner. And they want to be solicited both by funds to invest in their funds and by startups to give support and feedback. And that pool of capabilities is a particular talent set, right? They come from a high growth kind of industry. They have wisdom that they can invest in and add to it. And the Tech Council is perhaps the best institutional partner that collects that population of talent. And within that population, those companies are working on diversity and inclusion efforts themselves. And so our hope is that through our partnership with the Tech Council, we'll be identifying candidates for the investor side that are not necessarily plugged into the startup world, but are plugged into the tech world, and that they are candidates for being investors. And so that's an example of a particular tactic that we've kind of gotten excited about. Beyond that, I would say we need nominations from a diverse population of people with connections outside of our ecosystem. So to the degree that that you see an opportunity to introduce, we'll take a meeting with everybody you suggest, right? And try and tell this story in an abbreviated way that gets people excited from across a spectrum of sectors and communities. Any other, did that address your question? I think it's an important question.
Yeah, I'll just encourage you that the diversity challenges that Silicon Valley are facing are there for a reason. And so to
Absolutely.
replicate what they've been doing, I don't think is going to necessarily win it over. But as you said, this is all of our challenge. So how do we as partners help and think through what that looks like? And I think we just have to think through it that, nope, we don't have that tight-knit network. And I don't think we want to, because that tight-knit network has not created the diversity and inclusion that we need to see in the tech field and in the investor field. So how as a community do we change that narrative? So I'll keep thinking about what that might look like and circle back with you and Jen.
Yeah, and everyone who has either, I think, very constructive comments or critiques, we're approaching this with humility, saying this is not a playbook. We demand that we know how it will play out. We're listening, right? So who would be next? Oops.
Hey, Justin. Oh, sorry.
No, go ahead.
Hi, Justin. It's Joan. So I spent some time looking at your website, and you're asking for a lot of time from these new investors. So
True.
One of the things that, and I've now been working, in the untapped area with the philanthropic community now for 3 years. They don't have more than an hour to give you to go and do something. And the concept of a 2.5-day training event or 5 weeks of, meetings, that is going to be problematic. And I think that you really need to look at or do some research on, people in the community that you think might be targets for this, and look at what their willingness to commit time is. Because otherwise, I think you may be creating a difficult barrier to reach the people you're trying to reach.
I think you raise a very good question that we reflected on almost immediately. That is very clearly $5,000 for a high net worth investor is relatively small amount of money. The amount of time we're talking about, a weekend and multiple weeks, 1 or 2 nights a week, is the harder lift. And so fully appreciate that you're right. That's a challenge. The reason we are comfortable with it and not trying to reinvent the wheel and kind of trusting the process and running it to see how it works when we apply it here is that it's worked very successfully in other communities. And I don't see a reason why Arizona high net worth investors would be any different than Alaska or Seattle or San Diego in terms of their busy schedules. And so the reason that I think you're absolutely right that there will be a lot of people where the time is not it's not available. They're not willing to invest it. They're going to choose to do something else with it. And so we look at it from the startup side of things, which is that those are not our customers, right? Like that this is a requirement. And when you have essentially less than 1,000 people participating now and 265,000 people that could participate, we're seeing an enormous amount of people who will fit all the criteria, including time. And the question is just, how many, what's the funnel look like to get to that? And I remember Kai, he might be able to confirm this, that in Alaska in particular, the reason that they've had any struggles at all is not at all on the investor side, that the investors after year 1 come easily. It's actually it was the startup pipeline and the ability to find deals that were worth that volume of money, right? They actually constrained the investor pool. And so we don't know that we're going to encounter that. We got to execute well, but I think we are willing to run the experiment as it is, recognizing that you're right. That's a scary concern.
So
Justin,
follow on to that, Justin, is you showed us 5 angel investor groups. All of those angel investor groups have potential sidecar funds. They have potential mentors. Why are you setting up additional funds? Running a fund is expensive, especially if you don't have a lot of money in the fund. The ratios just don't work. So how are you going to deal with the compliance issues and everything else? Wouldn't you be better off to funnel the people you're training into the existing angel network?
So that's exactly what we're doing. This is an experiential learning process. So the concept of experiential learning in the education field is that you learn a concept, you apply it, and you learn from your mistakes, and you move forward and build your learning that way. So we are not building a fund for the purpose of outperforming other funds. We are not building a program designed to be an alternative to angel groups. This is a system that funnels investors into the angel groups, that they will do one investment at only $5,000 with our model, and that we want them to graduate and go off and do great things. And so, there is a reasonably economic, viable way to do this. They've done 15 what are called SPVs in Seattle over the years, and another 3 or 4 every year in San Diego, and multiple. We've got a partner whose entire purpose is to their role is that they are the fund administrator, and they build the systems that make these funds cost effective to run at this dollar amount. And you're not staffing. The other piece is that this is not a venture-led model, right? This is, a VC-led model where you're hiring a firm to make the decision. So that cost is not, there is no cost to to hire the firm and set aside the points and that sort of thing. It's the funds that go into the fund get sent back out, other than the cost of administering the fund itself, which, from what we gather, is on the order of $500 per unit, I believe, or I forget what our number is, somewhere around $500 per unit, which means that the cost to administer the fund is about 10% of the fund. But again, it's a think of it as a lab fee rather than the full-blown investment economics, right? That happens in the angel groups or in funds that might grow out of this initiative. And Kai, you had a comment?
Well, I think you've kind of covered a lot of it. I just wanted to note back, in this question about time, and Gwen's probably got this data more, readily at hand, but I do acknowledge the time issue is there, but it's really, really important to understand from the angel investing standpoint that the time spent in looking at investments and doing due diligence is completely correlated to the return on investment. So to your point, Justin, angel investing is definitely, something that requires some time. It's a way of taking your experience, your money, your connections, and putting it to work. But you got to put the time into doing it. If the time in doing capital gravity is too much time, then this, may not be the kind of investing somebody wants to do.
Which
Yeah,
is
I'd love to
perfectly
just
reasonable, right?
weigh in on that, Justin.
Yeah,
or
Gwen.
Kai. It's so true. It's extremely time consuming as a lifestyle, as a thing to do. And I think that's one reason why there are some platforms that are alternatives where people can just invest a little bit and they don't have to do any diligence or heavy lifting. But if people want to get personally involved and bring their talent and their operating experience and all of that into that environment, to Kai, your point, I'm so glad you know this data, but when individuals as a team invest at least 60 hours doing diligence on a company, that company outperforms. It's something like 3 times a better performance than the companies where the investor wasn't very involved. We've got that data. It's fascinating. So it's expensive because it's precious time, but it's very different from a mutual fund, for example, or ETFs. There are lots of these other alternatives. And by the way, there's somebody building a model right now called KYOTO, an angel group started here by a former band. He's trying to build an ETF for startups. It's out, it's available, you can participate. But, so I think I just want to reinforce what Justin, I think you're trying to do, which is enable the talent in Arizona, all of that money and talent to come to the table if they want to, and really bring that knowledge base and experiential base and put it to work. So, yeah.
And I kind of want to just tap onto the end of this whole thread, which is that Joan raises an incredibly important point that as I said earlier, we've been thinking about since the beginning. And I don't want to overpromise that we think that this is a universal solution. This is, to the degree that it can become a universal solution, it's because it's activating a different approach to the conversation about ecosystem building, which is that we're doing it through the lens of the investor, the high net worth investor, which has years of experience. They are not the founder. And that in focusing the journey in that direction, we are, and we're taking it in an approach that is designed to fill gaps rather than identify that there's plenty of room and we're just gonna have to compete. Like, this is very carefully crafted over the years to fit between the existing solutions that are out there. And I think some of the work that San Diego has done to expand on, I think, what Seattle does well, we're pulling that in, which is this fund manager model, which will, if we do that well, if we focus on that early and do that well, we will be able to identify people who themselves can make a difference. And think of this as a leadership development pipeline in addition to an investor development pipeline, which is in addition to a startup investing pipeline, right? It's multifaceted impact in its vision, and I think the tools that we're using can have outsized effects. In the same way that 10 years ago, when we talked about running startup drinks, people would look at startup drinks and say, why are you wasting time on a happy hour when we need companies that need funding, and we need companies that, and it's because it's building the infrastructure and the feedback loop and the mechanisms that are not obviously funded by government grants and other things like that, right? So I'm hoping that our approach is different enough to affect change in a positive way, in ways that aren't obvious from the get-go. So more questions. I know we've got a lot more that are unasked, and we're obviously well over our time. I'm happy to, let me put it this way. I'm happy to continue the call, and we're going to record this. So more questions, if you want to stick around, feel free, and we'll ask them. And we'll also capture everything in the chat. And so we'll try and identify, this will go into our FAQ, which will be fantastic. We'll put it up on the website, but I'm happy to stick around and continue taking questions for anyone who'd like to stick around. If you need to leave, I should have acknowledged this a few minutes ago, but feel free to leave, and I'll stick around and continue this. And if anybody on our team needs to leave, I can manage the rest of the call.
I just want to end with one quick comment, Justin, which is I totally appreciate what you just said in that last comment, and we need more ecosystem builders with like you guys trying new things, right? And figuring out what the solution is and taking big swings. And whenever you're in front of a group of ecosystem builders or entrepreneurs who do nothing but poke holes in ideas and strategies all day, I know it's a little bit intense, but you're doing good work. So thank you guys. We're looking forward to supporting you and keep crafting what it looks like.
Thanks, Kristen.
Thanks, Kristen.
Yeah.
I will say personally, this is where I love the critiques, because when they come from a place of authentic alignment, which I know we all have, then they are simply improve. It's just like what Kai was saying about angels. They aren't there to destroy the startup ecosystem. They are there to make it better. They are asking hard questions that will make it better if you have good answers to them, right? And so even if we don't have good answers today, super excited that we're getting the questions out.
Okay, so for the ones who are staying, I know Shane had asked a question earlier on that I had skipped because I felt it was easy to follow.
I think it was answered.
Yeah, yeah, two questions, but one of them was if we could supply a thoughtful email template, and I think, yeah, we could do that.
That is a
To-
fantastic question.
To
Help
see-
me, help you.
Yeah, what a good.
Shane, you don't think just, hey, you got money? You want to do some stuff with your money? It's going to work? Is that what
Yeah.
you're saying?
And it didn't cross my mind to do that.
Invest and
so
work.
Perfect.
Hey, Justin,
Yes, sir.
I wanted to bring up a point, and maybe I ought to take this offline, but I'd encourage you, as well as those that are on this, to consider that the folks coming in and participating in Capital Gravity don't necessarily need to all be exclusively brand new to angel investing. There's a lot of value in my experience to how this runs that has a mixture of folks with varying levels of experience. And that mixture is super important to the quality of the discussion and to the experiences at the table. It's also a recognition that any of us that have been doing angel investing for a number of years still have an awful lot to learn. And there's a lot of, lone wolf angel investors that have been out there doing it and will say, I'm already an angel investor, and yet may never have really learned the intricacies of the different ways of doing valuation or doing due diligence, and may not have the experience of working in teams and recognizing the power of some of the syndication opportunities that are out there. So I would encourage all of you, as you're out maybe talking amongst your friends, to be, seeing who might be interested in this, recognizing that this is a labor of love. You have to kind of like doing this. You have to like sharing your experience. You have to like, kind of living vicariously through startups, in the sense that if you can help a startup be successful, it's a way for you to, kind of validate and be successful with them. And the successful cohort in a program like this will have a mixture of experiences and backgrounds, and not just be brand new and don't even know if they're an accredited investor or not. So look for a diversity of folks that have done in different styles. Even some folks out of some of the angel groups or angel networks might want to go through a program like this. And I guarantee you, in our ecosystem, that the folks who have gone through this go through this repeatedly, because they come back and want to do it again because of what they're learning and the people that they're meeting and the exposure to the startup. So just 2 cents there in terms of, that invitation for how you engage other people. It's not just, hey, have you ever thought about this? But in some cases it's, hey, are you already doing some angel investing? Maybe you'd like to get involved with this and learn more about it and help support this group also in its efforts.
One thing that I'll add is that we have had a couple of discussions with different angel groups around the state, and we have, I think, 3 more to have. But one of the ideas that came out in our discussion with Joanne at Desert Angels was that we want to set aside 5 slots, 1 for each angel group, to have them identify a current member who we can identify them as an angel in residence or something along those lines, that would ensure connectivity between the angel groups so that there's cultural connection and fabric. Also creates a slot for an experienced investor to fill and a leadership role. And it serves a dual purpose, right? To demonstrate that this is not a competitive model. It is very much a service model designed to expand the capacity and build the resources of the groups that exist today, not to displace them in any way, right? And that got really good feedback. And so I think we're gonna model that into the first cohort for sure.
So we have a question from Mahesh. Did you want to ask it, or do you want me to ask it?
Sure, Jen. Hey, Justin, thank you for inviting me and having me here. So I think it's a very informative session. And, interestingly, I did, a couple of investments in the last couple of months, but then we never know, is it the right thing or not, all of that stuff, right? We just do some Hail Mary investments based on the founder or the friend that refers the founder and so on and so forth. So I think it's a great initiative that this is being done. Very good. And my question is, say if there are dual roles can someone play, right? So, someone wants to be an investor or kind of is an investor, and then he's starts a startup, right? And then he raises money. Can he be an investor in this whole accelerator? Talking about dual, right? You talk about dual. So
what we didn't talk about, so I would imagine, and Kai might have a more definitive answer, having participated directly as an investor. My initial reaction, if you were asking me this while we're having coffee, is the answer would be no. You could not both be a voting member of the fund, making, in a position to make a decision about how to allocate the funds.
No, it's not the same time. It's not the same time.
And be part of it, right?
Correct. Let me qualify it a little bit. It's not the same time. Obviously, I understand.
Oh yeah,
it's not the same cohort, right? It's a different cohort, right? So I'd be an investor in the first cohort. 4 cohorts down the line, I become a founder. That
is what ecosystem building needs, is founders who succeed and put their money back in. So I was actually trying to find a way to achieve your goal in one cohort, and there is a possible way to do it, which we didn't talk about. And I saw some of the other questions about how do you bring down the dollar amount invested. The answer to my version of your question, and the answer to those kinds of questions, is that there is an active member, an active investor role, and a passive investor role. And I've only talked about the active, but a passive is one who has no ability to, no vote. They just put money in, and whatever is decided happens, and they throw money into the pool. And so we have decided that dollar amount as a passive investor would actually be lower than 5,000. It'll be 2,500. And I wonder, we'd have to screen this, I would think, both by the fund administrator, kind of our legal advisor partner, and the actual members of the fund themselves, as to whether or not someone who's applying to receive funding could also make an investment as a passive. I couldn't imagine they could do it as an active, but it's conceivable you might be able to do it as passive. But that also, I brought up the passive because it's a lower dollar amount. What's interesting about it is that someone who is not an accredited by economic standards person might be willing to put $2,500 into something like this, because that's, you know, a paycheck or two, and they live, you know, comfortably and simply. And what's interesting is that there is a mechanism that we are, you know, considering applying through this, which is you can become an accredited investor without the wealth levels that are traditionally necessary. You have to go take a test, a Series 65 exam, the SEC, it's an SEC certified exam, and that makes you you are no longer grandma who might be scammed out of a retirement money. You are a well-informed, knowledgeable person, and therefore, even if you don't have $1 million in the bank, you might have $2,500 and pass that exam, and then you could be passive or active, actually. So we're not announcing that, but I figured I'd share that because I think it's also a way to onboard more diversity potentially.
Okay, got it. Thank you, Justin.
Yep.
Makes sense.
Other comments or questions?
Justin, I just wanted to pick up on that, and I put this in the chat, but in Alaska, we're using our state intrastate crowdfunding rules to actually allow non-accredited investors to be participating in this fund under those regulations. And to the point that was in the chat, that's helped us open up access to this to a lot more diversity and participation because of not having that threshold of accredited investor. But also to the point of the question, we've really enjoyed the fact that we now see probably 20% of the participants are flipping one side or the other in this equation. They're startup founders. And in one case, I know it's a startup founder and their work that actually won the investment the first year, is now back and is an investor in subsequent cohorts of this. So we're seeing that connection back and forth of participation. So it really is a lot of fun when it comes together that way. But there are some interesting variants on the investor style. But I would agree fundamentally that while, and this was, I think, the intent of the question, that you can have in different cohorts, somebody being on one side of the equation or another, I would avoid doing it in the same cohort, which I know wasn't the question, but that's just way too complicated dealing with conflict of interest.
I will say that we, Will Fowler, Signal Rock Capital is our fund administrator partner, and he does this for San Diego and Seattle and others, and is among the most, in a lot of ways, I think he's more knowledgeable than the people who run them in their cities, because he's gaining wisdom across communities, and he knows all the legal compliance and other stuff that we don't really know as well. And his strong suggestion was to not commingle crowdfunding and angel investing for a variety of reasons that are just tied to complexity. And it doesn't mean that there's not a novel workaround that you guys have come up with that simplifies it, but it's why we're not doing a model like that, is that he kind of steered us away from it.
Yeah, and to be clear, we're not mixing the two models here. We're just simply making the investment participation open to non-accredited investors using the state's cover of the intrastate rules and in crowdfunding, which allows people to invest in something like this without being an accredited investor. Like I said, it opened up the program to a bunch of people that wanted to participate but who weren't accredited, and we could use the crowdfunding rules as legal cover for how they could participate in doing that.
Well, that's terrific, and I'm gonna pick your brain about the details on that.
Yep.
There are lots of other questions in here, but I'm gonna set those aside and just allow whoever's here to throw out whatever thought you might have next. There's people with cameras off, so they may or may not be around. But what I'll do is we'll take the questions that are in the chat and not necessarily deliberate them on right now, since a lot of people ask them aren't here. But we'll put those into an FAQ and look for that and a copy of the video of this soon. Hopefully, at least the video tomorrow. So Any of you guys have any questions or comments? Shane or Chad, Garrett, Patty?
Well, obviously very excited about this, and we just need more and more and more of stuff around here. You know, my philosophy, I'm not sure who said it and if they're still on the call or not, but somebody said something like, why are you building something new? Why don't you just help the existing stuff? And sure, but a lot of the existing stuff doesn't work for a lot of people. And a lot of people won't go to some of that existing stuff because of rumors that are true or aren't true and experience they've personally had. So there's ripe opportunity to lift all boats here through additional competition. And I love that you're going to funnel people into the existing programs, and you should, but you should also, to a certain extent, position this as something that will create new opportunities for people that the system doesn't serve.
Well,
Is that fair?
it is definitely has the potential to be that, and that is I think the angle and the direction you're coming at this with is 100% true. As is the other comment that we heard about the need to be supportive of the institutions that are already here, right? We can do both. That's what's exciting about the model is we can do both. And there's actually some data that I've learned recently that essentially, I don't remember where this comes from. Maybe someone on the call knows, but there's a rule of how big a group can be, not just angel groups, but any group. Like there's some number of 150 that makes it a functional community. And if you go too big, it stops being a functional community and it naturally needs to divide. And first of all, none of our angel groups are at that level, right? But if we were performing at the level where the numbers say we should be, we should have 2,500 angel investors and we have 500, which means we should probably have 10 angel groups, but we have 5. And what happens is that as you activate those 2,500, you kind of fill the capacity of the group. And a lot of what will happen isn't that the groups that exist today will be shunned or won't be populated. They will. They're what exists today. But what will happen is that niche groups will grow, that they will specialize, that you'll get 10 of them, but you'll get ones that specialize in different domains, because what exists now is generally generic. And so they all feel like they collaborate and compete. You will end up with diversification and differentiation when you get more capacity. And that's going to serve that's a natural positive outcome that I think will come from growth, whether we're responsible for the growth or not.
Beautiful.
All right. Well, thank you
Great
guys for
kickoff.
taking the time and sticking around. I'm going to cut
Very
the
cool.
conversation short so that whoever watches this video doesn't have to watch it for an hour and a half.
Oh my goodness, yes.
2 hours.
Thank you. Yeah.
So,
Now I'm
you.
ready
Thank
for
you,
that happy
Justin.
hour. Where is it tomorrow?
oh yeah, we don't have a happy hour tomorrow. We should maybe we should do that.
You need a
Um,
virtual one.
Yep.
Rachel, we had those for a while.
Yep, we did.
We
I'll go get a
did.
beer if anyone wants to drink a beer with me. I'll turn off the recording. Otherwise, we'll let you guys get back to your lives. And thanks again for doing this, and we'll be in touch.